Good morning, everybody. Welcome to the Flow Show. A bit of a lacklustre day today so far, Wednesday 9th of July. It is deadline day for all the tariff shenanigans. More letters on the desk apparently coming today. Don't know what else is going to happen, but things look a little calmer in markets anyway. Morning, Kay. How's it going?
Morning, Ryan. Yeah, morning, everybody. I guess we're all waiting to see what's going to hit next with all those tariffs now.
Yeah, exactly. Actually, the Bank of England just released their latest financial stability report. Just looking over the details. Just see signs of basis trade coming to the gilt market. Otherwise, not a lot from that rubbish.
Yeah, there's a lot of moving on in there.
Yeah, exactly. Definitely. Today's got garden written all over it at the moment. Nice weather and not much on the calendar. Right. Anyway, let's get cracking and see what's coming up. Yeah, it did have a bit of data out overnight. Oh, not even got the calendar set up yet. Naughty. Boom, boom. Look at that. Come on, Mr. Spinning Wheel. Spin faster. Oh, here we go. Whee, there we go. Right, so Chinese data out, CPI and PPI data. CPI coming in a positive 0.1%, but still bumping along the ground. It's been flipping negative flat for quite some time now. PPI, though, coming in much softer than expected year on year, down 3.6%. There also been stories that business loan rates are coming down in China because there's a pretty big lack of demand going on there. So some of the grease that China's applied to the cogs to get things moving aren't getting things moving. So all the easing they've done thus far isn't getting loan demand higher. Appetite for people to borrow money, which is not good news. So they have to think of other ways to try and stimulate the economy. So we're still in that predicament, or they're still in that predicament. Japan had their preliminary June machine tool orders out year on year. That came in worse than expected at down 0.5% versus a prior 3.4%. 3.4% expected and prior at 7.7%. That itself, the prior might have been a bit trade front running related through that first few months of all that stuff. So this might be a bit of a give back on that. So I'm not going to take too much to heart with that. The RBNZ, they kept rates unchanged as expected, 3.25%. They said easing inflation may justify further rate cuts amid all this global uncertainty. And that medium-term inflation pressures are projected to ease and further OCR cuts are expected. So they're still on the path for cuts, but it's a bit of a wait and see how everything turns out over the months ahead. BOJ's Koida, not Koida, says uncertainty is clouding the timing of the next rate hike amidst cost push inflation pressure. This is all the short-term stuff happening, like higher rice prices and whatnot. It's inflation, but it's not the type of inflation that they want, being picky as they are at the Bank of Japan. But it's pretty much highlighting what we already knew, that there's a lot of uncertainty around when they're next going to make a move. Kate, any surprises there from the RBNZ or anything you picked out?
Not really, just that they're like everybody in a wait and see attitude, and that is exactly what we were expecting for most of them to have. Sorry, yeah. Bath is still down. That is just a confirmation of what we all know, I guess. It seems like since Orr left, there's less seesawing or 180s being done between the one and the other meeting. We will have to see, of course, over several meetings he's just left. But yeah, no, and I'd say no big surprises there. No, and the market did a usual bit of a yo-yo, algo moves, trying to get I suppose orders out of the way, each side of 60, the big figure, and but we are back there in the middle of the latest range, and yeah, it's just like with all of them, waiting and seeing, and then ready to act again. So as soon as we get clarity, we may see a wave of central bank moves coming. But when that will happen, I guess Mr. Trump is going to tell us first of all.
Yeah, probably sometime in 2027 we'll have some clarity, or when he gets booted out at the next election in 4 years' time or 3.5 years' time. Right, well, the OBR, this is the UK Office of Bodged Responsibility that oversee our UK finances. They must have been watching the Flow show yesterday because they issued their latest report saying that UK public finances are in a relatively vulnerable position, i.e., everything that is going on, all these U-turns and policies and tax hikes, that are coming, suggesting that the UK financial position is not looking very good. A UK spokey said that the government is focused on getting public finances under control. They can't get themselves under control, let alone the finances. And then they've already been hit by some non-under control news. UK doctors or junior doctors have voted to strike this year over pay because their 5.4% pay rise that they've been given on top of the 22% they were given last year when they all went on strike is not enough. So they're going to have to deal. The government's going to have to deal with that again, and obviously higher pay rises puts more pressure on the government's finances, and then they have to recuperate that somehow. So Miss Reeves, the bird from accounts, has got a lot of pressure on at the moment. How she's going to navigate that. None of it, in my opinion, looks like good news for the UK going forward. And as we were saying yesterday, that's got certainly both mine and Kay's antenna up for thinking about some pound shorts. But this might just be the start of it. ECB's Wojcik says the ECB must not rush into further rate hikes, but he was talking to the press about that. I'm not sure if he meant cuts on that. I only just realised he said hikes. Who knows? Now, we've had news out of Germany. We've been keeping an eye on what's going on with all this investing and whatnot. Handelsblatt reckon that several dozen German corporations want to strengthen Germany as a business location with an investment offensive. They say that this investment money that's being found down the back of the sofa will be used for new plants, the modernisation of facilities, and the development of new products. All a bit open and airy-fairy. Someone on the inside said that there's commitments totaling approximately 300 billion euros over 3 years, which is a pretty hefty whack over a short period of time. There's going to be a conference of the Investment Alliance, as it's called over there, on July the 21st. So we may get some comments from that. There's a lot of bigwigs, banks and like Deutsche Bank, Siemens, a lot of big firms apparently involved in this investment push. So we're going to have to see what comes of that and whether it is a boon for the economy. Kay, I know you chucked this up in the newsroom yesterday. Just looking at that initial amount, because they are getting in other commitments apparently, and of course they want it backed by the government. 300 billion 3 years, that's quite a short space of time. So we should see that showing up in the data as opposed to if that was over 10 years or something.
Yeah, sharp and short and heavy. I just hope they don't have to transport whatever they are creating new over the right because there's no water left in there anymore. But no, it's you know what, Ryan, and we're thinking back historically, and it straight away popped into my mind about what they call the German Wirtschaftswunder, the rebuild of Germany after the war, and even then take late 80s, 90s and stuff, where Germany was really the place to be. If there is a country in Europe that can do it, in my opinion, it would be Germany. But now the big question is, can they do it? And will they get backing? Will they get first of all, will they get it up and running? And what is going to be, if you think about a little bit on the sides, because the business is very much international right now. If they get any backing from internationally as well, because we're talking about very big companies there, Siemens, just to name one, which is a worldwide company, obviously. It would be really interesting for Germany if there would be that additional push in saying like international companies, because we're thinking about this we have been talking about very often about this reallocation into the Eurozone from the US because of the uncertainty in the US. But imagine that they get backing from international money. That would be a very big deal, I think. And then we will need to think about a German revival. Now we're not there yet. We will see, as you pointed out, on the 21st of July. First of all, if they can agree amongst themselves. But if Handelsblatt talks about it, that must be that they've been already thinking very hard about all of it. Yeah, I mean, it could be a very big thing for Germany. And as we know, Germany being uh, one of the main, if not the main engine in Europe, on the scale of things, it could mean a lot of good if they manage to get their act together on the back on this.
Yeah. Now I know this was all sources stuff, and I know it's a bit light on
Yeah.
detail, but just that comments in there saying that it'll be used for the money will be used for new plants, modernisation of facilities, and development of new products doesn't scream thousands of jobs, big infrastructure spending like improving transport links and that sort of stuff.
I mean,
So
they all be linked, right?
I'm a bit sceptical
Yeah.
of the growth impact. If it's Siemens saying, "Oh yeah, we're going to build a couple of new factories," fine, that's going to be good for Siemens. It doesn't necessarily mean it's good for the whole of Germany. That sort of thing. So I'm going to be a bit sceptical until we get further details, I
Mm.
think.
Yeah, of course. And modernization is usually nowadays not equal to the creation of a lot of jobs. But I think they're big enough companies to think about that. Yeah, the thing is with markets, Ryan, is that sometimes people see through the number of jobs, but if it's good for a country, more business also means more tax income and things like that, and
Yeah.
from that angle, I think business wise, money wise, it could just be the next best thing for Germany coming. But again, we need to know exactly the details, and if they really want to go ahead with such a big plan.
Yeah, and for markets, this news is all about exactly that, the details. Once the market hears that the details and it likes it, that's the sort of thing that keeps things like the euro supported. The market doesn't care what growth is going to be like in 3 years' time. It will worry about that in 3 years' time. All it will do is trade the expectation, and then we'll get over that hump fairly quickly and move on to other things. Bulgaria, they're going to be in the euro come the 1st of January, or on the 1st of January 2026, because EU finance ministers have approved them joining the euro. So they're going to get the funny money as well. And that'll be another country in the mix. We did get a tiny bit of data out yesterday from the US, the NFIB Small Business Optimism Index, which dipped 2 pips, but it's still holding up pretty well in terms of overall trend. It's a bit light on the calendar for today, I can tell you. Right, let's get into all the Trump and tariff and trade stuff. So Mr. Truth Bomb dropped one on us yesterday late afternoon, talking about tariffs being paid on the 1st of August, saying that this date was already in play. There's no change to this date, and there will be no change to this date, and no extensions will be granted. So if he's to be believed, August the 1st is D-Day, just like all the other D-Days had come. But apparently this is the one where we're not going to go over. So all people are still scrabbling around trying to get trade deals done. It's reported that Besant asked Trump not to go forward with reciprocal tariffs because there were deals being made still. So he wanted to hold him back a little bit. Back to Trump, he said on the EU that the EU has been speaking to us and the EU is treating us very nicely. However, they are probably 2 days off, or he's probably 2 days off from sending the EU a letter like everyone else is getting letters. Then Trump decided he's going to impose a 50% tariff on copper. Why not? Got nothing better to do. That is, according to Lutnick, is going to be put in place either later this month or on August the 1st. Lutnick also said that their studies on pharmaceuticals and semiconductors is going to be finalised by the end of the month, and 200% pharma tariffs have been touted if firms don't move production to the US. So that's a quick reminder there that while we are negotiating certain things, not everything, all sectors are under these trade deals and these tariffs. There are things like pharma and semiconductors to come. So even if we get over this moment, we're not at the end of the road potentially for tariffs on other areas. So be forewarned about that. Lutnick also said that Besant and Greer will be meeting with China to talk about trade in early August as well. Besant says the US has received 100 billion in tariffs so far and expects that number to reach 300 billion by the year end. White House advisor Hassett is also becoming a serious contender to become Fed chair. It's the battle of the Kevins, Kevin Hassett and Kevin Walsh. According to the Wall Street Journal, Hassett stepped up into the favoured position at the moment. So we get to see what happens with that. The Supreme Court has also dismissed some of this stuff going through about these appeals against all these government layoffs. So they've given Trump basically the green light to continue with his government layoffs, federal layoffs, although the decision that they made yesterday isn't the end of the story. It is one legal obstacle, as they called it, but the court noted that it was not assessing the legality of any specific layoff plans at federal agencies, and said those layoff proposals, some of which were submitted earlier this year, could still face legal challenges on a variety of grounds, including union opposition, statutory restrictions, and civil service protections. Now, I put the story in our newsroom, and it's worth having a quick butcher's if you're in our chat room, because this court stuff has affected the whole swathe of Doge cuts that came in. So we knew it's around the 300,000 mark, people who are going to initially be affected, but that's across all the different departments, some of which are arguing against it, some of which are now saying this court appeal clearance gives them the ability to continue. So it's not necessarily the case that we get to this August, September, October date and we're going to get 300,000 government jobs showing up in the NFP. Not everyone's been sent away, sacked, whatever you want to call them, retired and whatever. So it's going to be a bit of a mess. It's not going to be probably 1 month where we get one number and then we're all done with it. What we do know is it's an unknown that we know about. So it's a known unknown. We know it's coming. It's not going to be that much of a surprise if it's a big number. But how it all comes through, we don't know. So he's got his clearance, Trump, to do it, but he still may face other legal challenges, and I think he already is facing other legal challenges. So we don't know what's happening. It's all part of the mess to do with those jobs numbers. Kate, we're at deadline day for what's to come. Are we over the worst of it now, or could we still get some bombs dropping?
I guess it all depends whether the EU and perhaps China get the letter sent in today or even tomorrow, because now, let's face it, the 9th of July has been is a deadline. It's not a deadline in one word; it's a deadline in 2 words. Because he anticipated it with countries like Japan, Korea, for instance, and now he's probably delaying it for Europe and China, unless he sends them out today, which is very possible. I don't think we're over the worst because we never know with Trump. He can always pull something out of the hat like this 50% tariffs on copper, up to 200% on some pharmaceutical products. Yeah, so I don't think the worst is over. And as we've been talking about yesterday, the day before as well, we are now waiting for what's to hit next. If it's mild for Europe, I expect the euro, at least on the crosses, to remain quite big. And then I'm thinking about stuff like, for instance, the euro yen if Japan does not find a quick solution. Perhaps even euro sterling starting its next leg higher, because we know about the UK US framework, but we also know about other issues hitting the UK right now. I don't, but it could be that all of a sudden he sends out a letter to Europe and says like, look, you've been waiting for too long to come over the bridge. It's going to be 25, and then let's see if we can get back to 10. And such an announcement would probably send the euro tumbling 1% or 1.5%. So no, I don't think we are over the worst, but we are potentially going to have some clarity whether he sends the letters to the big blocks or not.
Yeah, and none of this means that everyone will stop negotiating.
No.
So that can still drag on for a while longer. But yeah, we know that Trump's playing the bad cop routine in this. He's letting his minions do the hard work, and he's just throwing out the warnings. That's his MO. We know it. We know how to deal with it. But yeah, we'll see what else we get. Galaxy is saying the sad part is employers are being replaced with more expensive contractors, and also events and state pushback will reverse a lot of cuts over time. Yeah, that's possible. If the US is anything like the UK in the public sector, there's a lot of chaff. Okay, I know that from personal experience. There is a lot of chaff that should be cleared out. Obviously, it's not nice to say that people losing their jobs and whatever, but government public employment has become very, very bloated over here, and you can probably do a better job with far less people. So, yeah, maybe clearing out some of those government workers is what's needed to get things working even better. And then as things grow, you can employ people back again. But yeah, it's one of those ones. Galaxy. There's two sides to every story.
And automation.
Sorry, mate.
And automation is replacing real
Yeah.
people's jobs as well.
Yeah, exactly. US Treasury is going to increase T-bill issuance, specifically initial increases in 4, 6, and 8-week bills. Kay, wanted to get your input on this one. Is this just something that's part and parcel of normal procedure, or is the Treasury looking at Powell and the Fed and higher rates and thinking, right, well, we need to get in where the lower rates are rather than where the higher rates are?
It's been an ongoing process to shorten the maturities, because obviously the yields are lower, and they all hope for the Fed to cut rates, which then would have an impact on some yields that they, or rates that they have to pay. It's actually already been ongoing since Yellen was still there. But yeah, I mean, it's just a case of paying less. But in the bigger scheme of things, what they do now is because the big beautiful bill just has been voted, so I think they are in kind of the process of seeing how much more taxes they will get from the one hand on the tariff versus what they have to spend, and nothing is set in stone for the time being in the Treasury. That's my opinion. people may have different opinions about that. So we are in a bit of a transition period over there, and for as long as that is going on, they probably will still prefer to do the short end because it is it is cheaper. But at the same time, it comprises a bit of a risk element because imagine that they don't cover all the big beautiful bill expenses by tariffs and other income with and again, like looking compare it what we were talking about in Germany. If companies build in America, build those plants and stuff like that, which is the one of the big aims that Trump is having, is that if you want to do business in America, build it in America, you know. And if they don't get all those plans or hoped for income, then they are going to be facing with a bigger problem down the line. But for the time being, they are in this kind of transition period, I think, where they again, it's a double-edged sword, as I was saying. I mean, there's an element of risk, but on the other hand, you pay a bit less right now.
Yeah, absolutely. Trump, speaking about Putin, said he's not happy with him. Says he's still dealing with him, but not happy with what he's up to. He's also said he's going to increase weapon production in the US, and the Kremlin have taken note of that because apparently the US are going to potentially supply Ukraine with more arms and defence systems, which the Kremlin's going to be keeping an eye on. This situation has sort of fallen a bit by the wayside with all the trade stuff going on, but it's I think it's going to come to a bit of a crunch point at some point, because Trump's going to say, well, you know, we're trying to get this done, Putin's not playing ball, so now we've either got to step up giving arms to Ukraine or more sanctions or what. So I think once this trade stuff dies down a bit, we may be switching to that thing again. He was also talking about clean energy, solar, wind farms and that sort of thing, saying he's not really on board with that because apparently wind is very expensive. It's bad for plains and valleys. If you live in the valleys, then you'll have an idea whether wind is bad for you or not. Anyway, that's his expertise knowledge on wind. That's it on the headlines. Anything else, Kate?
No, not right now. You were just talking about this Ukraine stuff. Just been some well, not studies, but plans seen by some investigators that China really is sending drones and stuff to Russia for the Ukraine strike. So that's another element of tension, I guess, that may be used by the U.S. administration to put more pressure on China. But okay, that's an ongoing story. It's not new from today.
Yeah, exactly. But it could become more prominent if the market's stretching around for other news to trade after this trade stuff. Right. Sorry, I'm just reading some of the comments. Right, where should we start? Let's start on Aussie dollar, and we'll have a look at oil because I know I think it was Demetrius wanted to have a look at oil yesterday, so we'll make sure I have a look at that. Aussie dollar. So it got a bit of a lift on this copper tariff stuff, but it's a bit of a strange move. Yes, you'd expect commodity currencies to rally when commodities like copper rally, but Australia's pretty well insulated from that. Their exports to the US of copper are less than 1%. It's countries like Chile and Canada who have bigger exposure to importing, but then we're not seeing anything in the loony on that news either. So who knows what's going on with that? Maybe the market's thinking that this is another bark that's going to be worse than the bite. Big numbers now, and it'll be dribbled down, watered down later on. Either way, we're looking a bit more supported in the Aussie than we were certainly last week and into this week. We've had that move. 64.80s held. We're now back above 65.10 and holding, and now we're messing around with the zone up here. So we're pretty much in the middle of this last few days, last couple of weeks range. So that tells you that we're not ready to be breaking this trend, but we're a little bit hesitant in moving it higher again. So as I like to say, when you've broken through levels and you come back below them, the hard work has to be done again. So we're in another situation where we've got to be holding the bottom of this zone and then breaking and holding the top of this zone before you start thinking about higher moves up and maybe an attack on that 66 level. So it's all in the balance a bit at the moment. Ali, you're short at 38. And you're looking for 60. Oh, I've lost it. 64.98 to 64.08. What do you mean 98, 65.08? Anyway, you know where the levels are here. You got to, if you want to get that number, you got to get through the 65.10 first and foremost. But if we're holding below the bottom of this zone, then your trade's going to be looking okay. But be mindful that we are recovering from this bounce and we're stepping up the support points. So on balance, it could go either way. Sitting here right now, I would say we maybe got a bit more chance of going up than we have going back down. But who knows what happens later on this afternoon? We don't know. Dollar CAD is another one that's struggling. We just can't seem to get and hold through this 36, 80, 85 area. And if we can't do that, then we're not going to be taking on 137 or anything else. Technically, though, we are doing the same thing. We're stepping up. We've got two step ups to look at. Firstly, this here. We failed 36.80. Then we held 36.30s a couple of times. Then we've come up here and now we're holding 36.50, which I've been banging on about as using as a bit of a pivot. So we've got to step up of that support to that support, but we can't get through here. So if we get another move through here, it's going to need to hold it. If we start holding above 35, 36.80, 5.90, whatever it is, then we're probably going to get a push up, and then we'll maybe take a look at this zone up here, which has been a bit of a bigger term traffic area. The other step up is this one, where we had this very decent low, and then we stepped up that low to here. So if you're looking at the wider picture and this overall trend that we've seen all year, this is looking a bit more solid than what we've seen previously in terms of finding a bottom. So take away the shorter term moves. If we get a move down to 36.15, 36, and it holds there in the same way it held here, that will be a third step up, and that will be a surefire signal that we have put in a really decent bottom down here, which will then give it the ammo to go and tackle some of this yearly trend, talking maybe back up 138s, 140s, something like that. I'm still a little bit short, and I was just saying in our chat room, if I see that sort of price action where we see a dip to down here that holds, I'm going to bail my shorts if I'm still in them and flip long, because as I say, that will be a pretty decent signal that we're going to be heading higher. Of course, we could just break up here and then continue on and still go on to make those highs. But if you've been bearish dollar CAD for a while, the picture may be changing, okay, or maybe has already changed. So be very careful if you're still thinking about shorting dollars. Dollar yen.
Just a quick word about the dollar CAD and maybe Aussie as well in regards to that copper. Yeah, we saw a big jump in the copper prices, and intuitively people would say like, "Oh, right, that's good for Aussie and Canada, perhaps." But I don't think that Canada is anywhere near the top 10 or so of copper producers, but sometimes it can get a bit because all commodities are a bit. It also makes it more difficult to export to the US if they would need to import. We have to know that US is also in the top 10 of copper producers themselves. So I'm not sure whether it has a big impact, but if we look at the impact that it may have, negative impact it may have on exports to the US from certain countries and their currencies, we may argue that the price of copper Yeah, it's jumped, but if the exports are made more difficult, it may not have a big positive impact on the currency, or at least
Yeah,
not lasting.
yeah, exactly, exactly. Yeah, that's why it looked. The move looked like a
Mm.
typical. Oh, copper's gone up. Better buy Aussie
Aussie,
sort of thing. Where it's not necessarily the case. But yeah, longer term picture. Yeah, I think this dollar CAD may be looking like it's got a decent bottom in play. Dollar yen had a little niggle through the 147, got up to that fib level, that old fib level, poked its nose briefly above it, but we're back below. This is the range that we need to watch, this 147, 47.15 and this 146.50. If we break there, we've got another level not too far below, around 146.30. That will be next on the cards. If we're moving back below that, then maybe we're going to start washing out a bit of this trend and we're going back into the old up and downy middle of the range around that 145 area. I'm still a bit long. I've got my stop locked in, so I'm all right. But if I see another test up here that holds and there's no big news behind it, or if there is big news behind it and we still can't get through, then I think I might fold up and maybe even go and dabble a little short on that one just to play the level. But yeah, the range right now 146.5, 147s. Take your cues from that. For breaking up, then we're probably going to tap some of these high levels, 147.60s and 148, which will be another trade in itself. You got any view on this one, Kate? Staying offered in this, but
It's done. Yeah, it seems to have done the major move now, and people want to take profits because they never know what's going to hit next on the wires. Um, I'd say for as long as nothing is done in between Japan and the US, it could be that we see this profit taking and waiting for the next round of negotiations. But if it's again a negative one, you're going to see a next leg lower in the end. But it is also seen its weekend. It is also one of those candidates that when they get a deal which is okay for Japan, and we've already been talking about it, it also potentially the biggest mover on the other side. And I think the market is in this kind of mood that it does not want to be taken completely by surprise, because it has been taken already too many times by surprise from April with the US, but also fresh in the minds when the Bank of Japan makes a bit of a surprise move. And so I think in this, and that was also behind my thinking yesterday when taking the profit on the euro. And he's saying like, okay, I mean, we've done the move. Let's take it and then see what happens next. Okay. And that's where I guess the market is at right now as well. And then, as you say, you're running into those levels. Yeah, I mean, from here all the way up to 148 and 148 and a bit, we are in a bit of a zone here. We also know that the yen can be a bit volatile, as we have seen several times. So, yeah, I think it's the case of let's take some profit and then see what's going on. And of course, if you that's just the laws of supply and demand. If you don't find any buyers anymore at the top, it only can go one way for a while, and that's that's back down. And then we will see where the buyers step in again. You look at the crosses yen though; they are still pretty lofty, pretty at lofty levels. And yeah, we're giving back some, but we are not giving back massively.
yeah, yeah. And this, I mean, there's not much going for the yen at the moment. You've got the Bank of Japan
No.
who's got so much uncertainty, they might be sitting on their hands for another 2 years.
Mhm.
You've got this trade stuff going on, which is a bit of a surprise. We've got the election coming up, which
As well.
is not going to be a game changer. Like,
Mm.
we're not going to see a change of party or anything, but, Ishiba losing or weakening his hand
Mhm.
in those elections is not going to be good news either. So
No.
we're in one of these situations that there's not much going for the yen at the moment, and who
No.
wants to buy it?
Exactly, right. And if he loses a bit more, he's really going to have his hands tied as well in the diet, and which would be a first since I don't know what how many decades apart from just ahead of the big quake. We had a bit of a DPJ lead, but that didn't last for very long. Exactly, on the economical front, it's not rosy right now. Political front, not rosy right now. Economic data up and down at best. Yeah, there's not a lot going for yen right now. But the good thing is that we may find answers to a lot of our questions regarding yen between now and the 1st of August.
Yeah, yeah,
And then we
exactly.
may start a fresh trend, which may come under the form of a continuation of what we are seeing now, or a complete reversal. But in the context of uh, economic data and yields, for instance, yen is still you're still paying to go to be long yen if you want to keep it for longer.
Yeah, exactly. Still a cost burden to sit in it for any length of time. Not that there's not that you can't short yen pairs,
Yeah.
but you need to. You don't want to be sitting in them forever, or you're just giving your money away. Right, one more, then I'll bang it over to you, mate. Just have a quick look at oil, and yes, I'm going to look at the continuous contract before Mark in our chat room tells me off, rather than a futures contract. It makes it easier. US oil. Again, we're a little bit in the middle of the recent short-term ranges here. We've got this zone, which is a bit of a big one. Okay, it's a very, very old, long time support and resistance zone. So we're not really making a decision which side we want to sit on it at the moment. We're trying to sit on the top of it, which gives it a little bit of a bullish bias. We're certainly not looking like we want to be testing these lows once again. So for now, it's looking, as I say, a bit bullish. And while we're holding above this 67 or the top of this zone here, 67s, then every chance of going on and cracking up. The thing is, though, the demand picture still isn't really there. Yes, we've seen little bits of pickup in manufacturing, but they're still pretty much most countries are in contraction if you're looking at the PMIs. Maybe Germany will be the spark, and certainly not China at the moment, given their economy. So I don't see a reason why we should be heading all the way back down here, unless OPEC Plus decides they really want to start hiking production. But I still don't see a reason why we're going to continue to rocket, or why we should rocket higher from this point. So probably I'd say look for a bit of range trading around the 60 to 70, $80 mark, rather than doing anything bigger than that. Kay, you got any thoughts? Oh, sorry. Got any
Yeah.
thoughts on oil while I pass it over?
No, but we are in this, how shall I say, this zone of traffic zone, I call them, and we have been trading that zone already quite a lot in the past. Overall, I still think tops are getting sold for as long as there's no material change in demand for oil. I think it may just um, over time continue to drift down. But I fully agree with you. We can see that even in the longer term, we are in this traffic zone between 65 and $70. I don't know whether people want to look at it in the really day to day. I think we can go back up to 70, but then what do we do over there, right? So that's a bit of a question mark. And as I've been saying since the start of the Ukraine-US war, the biggest spikes have always been sold into. If you look at them, they're always lower, lower, lower. So that's the global view. On intraday, I don't really have a big view. Mike, you were asking about the euro dollar. Look, I've been musing about it in our chat room. My yesterday update was 38.2, 116.85, and then the top end of you can call it a flag, or the past ranges around 117 three quarters, 117.70. We're still inside. We are waiting for what's to hit next. Um, I'm for as long as there's no negative news on the euro, I'd rather buy it, and you can have actually a relatively tight stop on it right now. If it goes through 116.65.70, it's probably going to go a little bit lower. But we are never safe of that letter, and the market will react to it, whether it's justified or not. The thing is that we are in this market. A lot is driven by models and short-term reactions. We sometimes can call them overreactions as well. So the thing is, if you have a position right now, you better have a good broker that protects your stop losses as well, not to be done on an enormous spike lower. I would argue that if it's positive news for the US, for Europe, there is no letter. We are going to go back up, but it's probably going to be more gradual. If there's bad news for the US, because now the market is rather in the mood of, okay, EU and US are negotiating. The EU has shown von der Leyen is trying to rally all of them around her, saying that we may accept that 10% at first and then negotiate from there. If there is, despite all of that, a letter that goes out and Trump mentions that 25%, the first reaction is going to be one that is going to be a bit of a snowball effect. Even I think that is the risk here, because not the longer termers, but the more short, medium termers sitting in that position, saying that, like me as well, we're holding like decent levels, that in this kind of mood, they're going to get rip their heads off, I think, and we could actually see a move, a very, very rapid move before the market then thinks again and buys it once digested. But I think the bigger risk of a fast move, sharp move, is rather to the downside than the top side if a letter gets sent out with less than positive words in there. What else did you? Oh yeah, the Kiwi. Well, we had the RBNZ. And we had the what we can expect, the usual yo-yo, went up 15, 20 pips, went down 20, 30 pips, and look where we are. We are at the 50% off, right halfway of the end of June move at 60, the big figure. We don't know what to do with this. They don't know what to do with this. Um, it's also possible that all of a sudden there's a letter going out to Australia and New Zealand as well. We're never safe of anything in today's political world. Um, but looks very, very neutral to me. So as I also put on this morning, I think 30, 40 on the top side, 70, 65, 75 on the downside. For as long as we're inside that, expect a range. We really need to break out again, top side or bottom side, to pick a direction in the Kiwi. And to be fair with you, I have absolutely zero preference or bias right now in at least not in the short term in the Kiwi. You look at it longer term, we're still trying to hold. By the way, this 59.65 I think is going to be relatively important. So the day it goes below and it holds below, we could see some move lower. Ali, you're short euro sterling. Oh, I'm on the Aussie Kiwi. I'm actually looking at that Aussie Kiwi from the more longer term. But I'm not inclined to do anything. Euro sterling looks pretty much the same as the euro dollar right now. This looks to be a bull flag to me. But we are now waiting somewhere in the middle. We are now waiting to see what's going to happen to the euro. I would say if there's nothing bad happening in the euro, I think we are going to go for a walk higher again, because the market is going to remember stuff that's going on, as Ryan already mentioned several times, in the UK now as well. If if it has to come back down, we are going to need to get back below 58, 85, 90. Then you could perhaps say like, okay, this blip is now done. But even then, if you think about it a bit longer term, I think anywhere down to mid 85s, we're going to already find support again. I don't think, looking at how the situation is in the UK, and also the relationship between the UK and the EU is still a bit, a bit on and off. I'd say we are going to find bids on dips. If you're short, keep a close eye. If it goes back above 86.40, I would personally wouldn't be short anymore. But in the meantime, yep, it's respecting this little intermediate pattern, but things can change very, very quickly. And I think for the time being, Ryan, what are we, sterling Aussie? Looking to add short on a pullback. Dimitris, I'm not going to disagree with you at all. I'm not going to disagree with you. I actually pulled it up yesterday. I was trying to find reasons to sell it again. I'd love a little bit higher, perhaps 209 or so. Overall, barring this big spike in April, it's been relatively inside a big range. I know that people have been trading it from the long side, but I think it's a bit undecided here right now because you know what? I think the market is not convinced about Aussie strength yet either. Okay. But on basis of the sterling, I wouldn't disagree with you. 209 figure 20, somewhere around there, unless you really want to wait for the full move higher here. But if sterling starts to weaken again, it may not even get there. Keep close eye on, but that's still nearly 1% away. Yeah? On 206. 206, those high 206s, if that starts to break, then I think it's going to accelerate to the downside. But as I said, that's still 1% away, still quite a distance away from where we are now. Okay, but I kind of agree with the direction with you, Dimitris. And with that, Ryan, back over to you, mate.
Cheers, mate. Thank you very much. Good stuff as always. And yeah, that's the show for today. Thank you very much, everybody, for coming and following us at the Flow Show. Don't forget to hit our coming soon page on the site. Get your details in for that. You can win one of two $25,000 trader funding program assessment accounts. Be quick or be dead. Try and have a good day, everyone. I hope it livens up a bit. Take care, and we'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.